Well, hello, folks. Top Gun here with you, and I got a good one for you. So, today I'm going to take a look at the market charts as we head into another week, and we're going to discuss for a moment not your keys, not your crypto. Okay? So, this is why wallets are very important. Shout out to KG and Internet Money working on their wallet. That is coming along. Their new webpage is coming along. They got their beta test. Exciting stuff. He's all over YouTube. Been so busy I haven't even been able to wrangle him for like a round two. So right on. Love that that's coming along. But regardless of that, let's talk about for a moment what's been happening in the crypto world. So right away on my channel, when Luna went down in flames, we talked about it and following the reasons why it happened and why this was so bad. Now, this has caused a domino in the bear market. So the Fed is tightening, markets are a little more scarce, investors are a little more solid with their money, the mania dies down some, and then the domino tips where, okay, Luna implodes. Now, if Luna was just doing bad stuff with Luna's money, only Luna would be affected. But all this DeFi yield, I know I love Hex, and it's because it's well managed. It's better Bitcoin. But DeFi projects, a lot of them go for this high yield gimmick. And the inflation in Hex is minute. It's small. It's 3% a year. It's designed to give it tradability. These high yield projects are like, well, we're going to get you rich. This is horrible because I do call, like Drip Network, a shell game, taking taxes or whatever using to make these yields. Money doesn't just come out of nowhere. So in liquidity pools, only the money goes in the liquidity pool can be taken out of liquidity pools. So even if the assets attached to that liquidity pool are being increased, that just dilutes those assets attachment to that by upping the market cap without actually adding any liquidity into the pool. That just dilutes the shares constantly and always. So you're buying something that's literally making it worth less. And that's by the inflation metrics. So, I mean, only those getting the max inflation theoretically would see the best. But then if there's time lock gimmicks, like unfortunately with Drip, a lot of people, the longer, the better it pays. So you want to lock it in for a year. But the people that started getting out 3 months, 6 months, that were early in, those ones ending money, they got a pretty good yield and they cashed out. And suddenly the deflation kind of hits, people come out and, oh, the ones getting out in a year got this huge yield, but now it's worth less money than the people that got out with the 6 month locks because not enough people are buying anymore to add liquidity to back up the increased market cap of this constant giant inflation. Now, whatever other yield metrics are used, the point is Three Arrows, the hedge fund crypto, was overly leveraged into Luna for their yield. And so the dominoes in the shell game begins, and you find out that Tom borrowed from Sally to pay Dick, and Dick borrowed from Jane to pay Tom, and Tom borrowed from Jane to pay Sally. Like, whoa, what? So the skirt gets pulled up, and Celsius had to freeze their assets. Too much into there, and too much leverage in Bitcoin. But yeah, 3AC goes down, and then we start having even more cascades. So we've had issues where Binance, they say it was a technical issue. It was only ours, so I'll leave them alone. But yeah, since Arrows has gone down, Voyager is now filing Chapter 11 because Voyager basically lent $667 million to Three Arrows for the yield so they could pay their customers' yield. And Three Arrows lent it to Luna for their yield so they could pay their yield to pay their yield. See this cascade thing, and so you'd like to think that Voyager was reputed on a bank. They said that, oh, we're backed by federal insurance, so you'll always be able to get your money up to 250,000. But not the case. Their partner, another company, which is not actually liable for any of their crap, has it. They don't. So all of Voyager going to be very scary to see what little they might even get back in the end once it's all done, but they got nothing for now. Depression and suicides abound. The Great Depression, what happened? Everyone got sad for losing money and killed themselves. People were jumping off skyscrapers left, right, and center. This is quite a market shakedown, or what? I hate being all bearish with this, and still, why I got the cute little cubs trying to keep this why are the bears so soft and friendly? Because the real pain hasn't started. As long as the Fed keeps the quantitative tightening, there's a lot more dominoes that are going to keep tipping, popping, and bursting. And as this process goes, the hope is that they'll get ahead of inflation. And once they do, they'll probably turn the printer back on. The question is, when will the Fed turn the money printer back on? Until they do, we're in for more pain. Once they do, and they stimulate the market with more stimulus, might as well just call it drugs. It's not even money at this point, but the market will flush right back up. That's what it does as soon as the Fed starts printing money. So there will be assets abound and opportunities, but until that happens, we are in a tighter monetary environment than even traditional bear markets. So we're seeing this round of the crypto pop, maniac pop for the normal 4-year cycle. But we'll see if the Fed turns on the money printer before we shake down even worse than normal this bear cycle. It's basically my thesis. So it's not that all hope is lost. It just depends still on a lot of variables. And I mean, the whole world will always keep spinning. It's not going to implode. You want to invest in Lockheed Martin or, actually anything that's government, pharmaceuticals, government contracts, government spending. Anywhere, the government's not going to stop spending in a recession or even a depression. Those companies will continue to get revenue. There are places, if you want steady, regular growth, to put your money. I talk about the market and the market conditions and give some ideas where, there are still recession-proof businesses. Anything that has direct business dealings with the government, a lot better position. Will the government do cutbacks? Yeah. Will the revenues decrease? Yeah. But will the spending stop? No. So, you can hide there and get 5% gains a year for the next few years, or however long this goes on. But instead of just keep talking about the fear like that, because, we've got Babel Finance, Voyager, CoinLoan, CoinFlex, and blockchain.com. Oh yeah, they did 270 million to 3AC or 3 Arrows. That obviously did not go well for them, but they're still claiming at this point that they are not insolvent, that they have enough to back everything up, and that nobody should be scared. Even though every other exchange seems to be popping. Well, that's really extreme. Not every, but we just have exchange after finance going pop, pop, pop. Oh yeah, we were involved in this, and then we were sharing with them too. How involved are all of these guys with each other? So I mean, as a company goes down, we find out about this big amount affecting one, but how many others? 3AC seems to have tied to a bunch. How many of them were tied to Celsius, and how many of them are tied to Voyager? So how much is their liquidity disappearing because they're not just leveraged in one place? It wasn't just one risky gamble like they'd like you to believe, because as long as you believe and keep spending, it's fine. But the issue isn't even believing and keep spending anymore. Everyone is spending to chase inflation because grocery bills and gasoline bills are so high. So your basic spenders that want to catch the mania can't, and the mania doesn't look like it's around, so they're having to spend on the essentials. And as a result, we're definitely in a hardcore bear market. I'm sorry to inform folks, and I keep pace on this metric. with this pretty chart here of US oil. So basically this upward trend that I had marked is the overgrowth of inflation. Well, we've got money, we've got demand, and lately there's been a crash down, which has wanted to be some optimism in the market, but you can't see so well the way it's zoomed out here. But oh, look, yeah, we've had a rebound up where it's coming to touch the bottom of this line. Like this line was support, but basically, in the thesis, this has now become a line of resistance because yeah, things are getting tighter, so inflation is in a way going to start peaking, and we're going to see the indicator in oil. When oil crashes and loses 95 as support, and we start recessing back the whole year, inflation's in, and when we hit that basically demand is starting to get really crushed in the market, that's when the recession really starts. So all this pain I keep talking about hasn't even started. So unless the Fed stops what it's doing, stops trying to unwind the balance sheet, nobody will buy the MBS, stops raising interest rates and turns on the money printer, the markets are going to crash. But at the moment, if they do that too soon, inflation will skyrocket again. So to keep ahead of inflation, there needs to be a time of correction, some pain in the market here for them to reload their ammo. So yeah, the recession has not really started. It's going to pretty much be a year-long suckage, probably. We'll probably, who knows, maybe start seeing it by fall, and it'll take till the spring maybe for the Fed to say, okay, enough pain, we've got enough ammo, and turn the printer back on. That's a guess, just a feeling. There's no good math behind that, but tracking the market, trying to keep peace and get better on those estimates for you guys. So with all of this inflation, I'm like, all right, well, there's more pain to come in Bitcoin and Ethereum. So Bitcoin, well, this is a noisy chart. It is a noisy chart. And Bitcoin's normally in the lead, but right now for trend, I just like to point out, since our April peak, April Fool's haha rebound, gotcha, bear trap, bam, nothing but pain, it's been pretty consistent that we've come back to touch this line of resistance and fail it. And we're still a bit of a distance away. But Ethereum, everyone was mocking it because, hey, it's here was this same April 1st haha bear trap, here's the down. It's never even come back to retest it yet. It rode hard down. Sorry about that. It rode hard down, and bam. So Ethereum's a little bit of a cleaner chart to read, and so it developed this green line, an even steeper line of resistance that has lasted quite a while, but it broke it. And once it broke it, this is where the market go, oh, we got to rally. And because Ethereum rallied and led it, the rest of the market kind of followed along. And Ethereum's been going with, not a care in the world. So we can delete this line of resistance because I don't think Ethereum is going to fall so fast that this is going to have to be a line of support. But then again, could be wrong. But for now, you can always redraw this. It's just noise on the chart. We'll get rid of it. I don't think it's significant. And this was just a little pause. Again, not a significant line. But now we've started having another downturn. Will we get past this line, or will we come back down and test 950? That is the question of the day or the week. Basically, the market is waiting to see whether it's a risk-on environment. Will Apple and Tesla do well? Will reports be favorable that the market will feel like, oh yes, this rebound can continue to test 150? That's basically the tech side of the market trying to have some optimism as it ended into the weekend. And this week, basically there's not a lot scary so far in the news, but not a lot optimistic, but just going to take some bad news to get Apple to shake down and lose these gains. As soon as it does, we'll lose that steam. Will it be Monday. Not sure yet. So looking at Ethereum, looking at Ethereum, like I said, this initially formed line of resistance that we haven't come back to test, that is the mirror pattern over here, the bull flag that went to the downward channel. Bitcoin is actually coming up to test it first. So Bitcoin will take the lead again. If it breaks this, it'll be even more risk on for Ethereum. And if it fails this, it's going to be a lot scarier. And Hex is built in Ethereum. So pretty much red lines is where I consider the bottom, the absolute bottom maximum pain of Hex. Again, I have that marked out. There we go. The red zone on Bitcoin. Yes. Below 10K and above 4 or 3. This is basically the maximum pain area that I have a feeling with the Fed holding out that is going to be rode into through the bear market on this shakedown. It's going to be painful. So as these drop, I keep an eye on Hex, trying to see what it's doing. So instead of this day-by-day macro, let's have a look at the micro, shall we? Because, yeah. Now you guys get why I've had a very long... Oh yeah, let's talk about it a little more. The very long channel, so when I zoom in, you understand why we run into these colors. So maybe I should even keep them like consistent colors. So let's make this green channel and gold channel, right? Okay, and we'll make the red line the current line of resistance, and then we'll go over to Bitcoin. So the current channel should be the yellow channel if we want it to look similar. Yeah. Alright. And the outer one's still green. So I've got two lines crisscrossing on this event, marking one from the actual top, from the first top, one from an earlier top. Because I had gone through these 2 points, thinking these two are significant, and they led through a bunch of activity here, which seemed very significant. Kind of ignored the actual top and came to this peak. Alright, so I've kept this line and kept it bright because up or down, this feels like the bear trend medium average, what we're going to go along. Now, going from the actual top, I have dim like the other channels so they match. That's the top, down channel, like I have in Ethereum, which actually came down and kissed off of. So what I should do is make this medium average line the hard to see one, and should make these easier to see. Alright, now our Ethereum and our Bitcoin charts match a little better so you guys can tell. And I've got this... Oh, I mixed those lines up though. My apologies, folks. There, enough playing around on the charts. So there's the comparison. Ethereum came down way harder, and so it became in the lead for the rebound. Now, as Bitcoin is already coming closer here, we're going to have the issues first. Now that we've got a color coding that we can understand for these two, and a little convoluted medium area, now I can zoom in. Let's go all the way to the hourly long term. Alright, this is where you might forget that Bitcoin is in such a horrible slump. But in the outer edges, you can see the channels. So the gold channel, pretty much we may have come to test like this is not good. We're already starting to fall through this dim one, which is what I call the median average. Testing that to fall. So 20 grand is going to be the next test. And we may bounce around there just a little bit longer through the week, depending on what happens. And if we fall, we're going to start down on this cascade effect towards the bottom side of the golden channel. However, we'll see if the green one holds out long term or whether the deeper trend of the gold channel holds out. So as I zoom out a little bit here, the idea is just a simple, like, it's a bear market. We're going down no matter what. All I'm really tracking is, are we going to go down and stay within the green channel? Or are we going to go down hard and fast and come down to the bottom of the gold channel? Because those are the two lines that are right now agreeing in a bull flag in the middle of downward pressure, and it's just trying to decide how fast are we going to go down, not are we turning around to get back up. There's been no reversal signal. There's not even a decent market rally. This is just a little dead cat bounce that has been rather disappointing, as it has been a very scary time. Like, there's not a lot of room when the Fed is doing its dance and everyone's starting to catch wise, and you have scary, unregulated middleman D practices going on where they are selling you assets that they don't have, claiming, lending out risky to make stupid gains like they tell you not to do and save with them. And it all blew up in their face. And the funny thing is, the banking, this is what happened in 2008 with the amount of MBS they were selling, and then the Fed's just been buying it since. Like, why would anyone want to buy it? It's the same crap it was then. It's the same crap now. People are going to be losing their jobs, going broke. Like, yes, the jobs have been going up. The unemployment rate hasn't really been dropping, because people are taking on second and third jobs to pay for their damn stuff. Like I talked about it with the fluffy puppy indicator, and that's when people started abandoning their pets. And then the stripper indicator, when people stopped going to strip clubs and people stopped buying crypto. Like, not entirely. It's not like crypto's going to die off completely, but yes, every bear cycle, 90% of crypto dies, and we're going to see a hard one, like 98%. Goodbye. There's a lot of scary projects, and so if you're not holding decentralized actual assets in your wallet, whether it be your Bitcoin, your Ethereum, your Hex, your IM, your IMD when it gets awarded, it's your Mintra, like whatever assets, if you're not holding these in your wallet and you're trusting them with some middleman, you're ignoring what crypto is all about, actually keeping your assets safe from these kind of practices. Because even when you go buy some Lockheed Martin, this sounds simple, but why don't I buy stocks? Well, I don't have a whole lot of money. Even if I got together a few grand, I'm like, I want to go buy stocks. Okay, I have to go to a stockbroker. Okay, so I go to a stockbroker and I buy stocks. I give him the cash. I don't just tell him I'm going to give him the cash. I don't give him a receipt for the cash or a picture of the cash. I give him the cash. And then he gives me a receipt and tells me, yeah, I've got stocks. No, I got a piece of paper that says I owe you some stocks. You don't even know if this guy's got the stocks he says he sold you. He's supposed to have. But you don't actually get the stock paper, the physical paper. You can't just walk into the company with that stock paper and slap it down. So a lot of times, it's still always coming down to trusting the middlemen, who always are in it for the greed. That's the way capitalism is designed. Make the most money possible. And if you're not greedy enough, you'll get fired. If you're not making enough profits, just being profitable isn't enough. You have to be more profitable every year, unless there's this kind of insane stuff going on. It's the one time you might not lose your job, because if you can just stay profitable, that's a job well done. But this insanity, always more and more and more, is why inflation is created, why more money has to be printed. There's not enough to sustain this level of greed. But that's the world we live in. Until we can change the game, we have to play within it. And this is why, again, Pulse Chain, I talk about it, I love it. I know, it's just Ethereum, but better. Like Hex is Bitcoin, but better. And it's not just better, it's so much better and cheaper and sustainable for quite a while that it allows a lot of other businesses to get started right away on it. And there's a whole ecosystem coming. And then this project with Mooch Movies. Um, yeah, like film producers using NFTs as profit distribution tools because it's cheaper and easier. And it can be set up to be automated, unlike paying out the checks from movie license distributions. And another thing we didn't talk about on the channel that he's not really boasting is they've made 3 films. They've all been profitable. None of them has been a loser. They've kept the budget so small that every project has made money. So this isn't like investing in crypto hoping someone else is going to buy it. You're helping them make a movie hoping someone's going to watch it. Yeah. Heck, I'll watch it. I'll watch anything. People love to watch movies for any random reason. So yeah, it'll get watched. It'll be great. It'll be awesome. I'm actually looking forward to seeing it. I saw the screener for the third one, which is like 2 of them made money. The third one right now, they're getting a deal to release it. Saw the screener. It's awesome, and that's bringing real world money in from real world goods and flooding the network with a well-designed ecosystem of trustless systems to actually process money the way they say it will, or value the way they say it will, because it's done by the code, not by the middleman agreement. So this is great. It still misses a lot of practical real world stuff. It's not going to completely replace the economic system so far, but you remember in grade school and they'd be like, oh, you got to make your own ecosystem. Get like a big jar and fill it with some dirt, a little water, some insects, and you got to see if you can balance it. I don't know. I had this kind of eco science project. I'm that old. It's like the early 90s. Like, yeah, make an eco jar. Well, if you think the whole broken U.S. economy, well, Pulse Chain's like the little jar. Like, hey, look, we've taken a lot of elements of the economy and rebuilding it to see if they work really well. If they do, we can add to it. And then we can even fork it and renew it if it's no longer sustainable because the price of Pulse is inflated so much because it's so awesome. Oh, well, we can just copy it again and do the exact same thing we did to Ethereum, fork it with a greater supply to reduce the spending costs so that it becomes practical and sustainable. So this stuff is not impossible to do. There's so many directions, so many opportunities that I'm still excited for Pulse Chain launch. As long as Ethereum doesn't lose 90% and drop below 120, then I wonder what that means. But I'm not going to go in that math and scary one unless it happens. But my red line for Ethereum, yeah, is pretty much my bottom red line is 120. I don't think it can go below that. There it is, my red zone. So the top of the red zone is significantly above, and the bottom of the red zone is pretty much just below my worry level. My worry level is like right there. So we got a lot of room for the red zone that probably most people don't believe we can hit. So, and even with the red zone marked, yeah, you have to get below the red zones to be an issue. So we won't even worry about that for now until we're getting to the red zone. Then we'll talk about that. For now, basically, yeah, got some market pain. And then down here, we had Hedron. Hedron was a little champ. Go Hedron, go. Like, Hedron, oh, it sucked it hard. So let's talk about Hedron. I don't talk about it much in this channel. It's well-written code, but it's a little convoluted, the borrowing system, at least in my opinion, and it only works towards Hex. You can't do other assets like fiat can, so you can't do shorts. You can't really use it that way. But it's meant to accent Hex, and it does do that. Now, it rewards stakers forever and always. If you go and stake right now, and then you have it for a few days, well, the number of days that you have a Hex stake, you can multiply those by the number of T-shares that you bought. So days staked times T shares times the amount tells you how much hedron you can free claim for being a staker. But once you claim against your stake, I'm not sure if you can keep claiming or there's gas every time you claim. So like ideally, you wait until the very end, the last day before your stake, and you claim there if you're going to do it. So when you claim your hedron, what are you going to do with it? Your hex holder. Probably going to sell hedron and buy more hex. So hedron launched, a few people dumped, and then it got listed on exchanges. It went up. I may have spotted a bottom. Funny how I keep doing that and calling that. Of course, I wasn't paying attention to the chart down here. As you can see, I don't have it marked out because I knew there was going to be a pump, but then I knew it was coming down, and I wanted to see how far. So, I mean, I literally put in less than $50. Okay, I was not a big spender here. It was just fun. It was some fun just to see, and I'm like, oh, look at that! I made some money, and then I just watched it come crashing down because everyone can keep claiming and minting against their hex stakes and selling it to drop the price down. I like dump coin, but at a certain point, at terminal velocity, like it gets the hedron's so cheap that there's not any value. It costs more in gas to claim it than you can get for selling it. So I mean, eventually there's a bottom threshold, which I knew was close in here, and so we really bounced off it here. Hedron's already a really crapped on coin. And so during this market steam, it did a 5x here, folks. Yes, let's zoom in so we can actually feel the pain that no one was really paying attention or enjoying. Hedron. Yes, here's a 1, then we count all the way up to 10 to a 1. And look at that. We came down to the 2, and we bounced up past the 1 a couple times here. I got to this video late. It was up here. I was like, oh, no way. But that is some 5x territory Hedron did. Is this sustainable? No. And are there probably still hex stakers with Hedron that they haven't minted? Yeah. And once they realize Hedron's up, could they sell it because it's finally worth more to sell it than it is for the gas so they can make money? They might. But Hedron has a lot of volatility and a lot of interest. Like there is more to it where, like, as it catches on and a real floor develops, I don't know. I've had some interest in it, but I'm not calling safety yet. Like it just had a 5x. There's room for another drop again. Especially if I make this video and people are like, oh, I can claim that and sell it. Sorry, Hedron guys, but that's the way you built it. Like you literally built it to not just be once. Like, oh yeah, like I can go make a stake today and then mint against it. Obviously better to wait more days or to have a long-term stake. Like I've been a hex staker for a year and now it's 365 times all that other good jazz. A lot more coins. But yeah, I don't know how to do the wallet chain analysis, or even if maybe I do, I'm very unwilling as I don't have the time. I am working long hours, like 6 days a week, and I need a personal life, guys. So I still try to keep coming with the hope because there is some, but I mean, you got to be a realist. There are market conditions, fundamental conditions in the world that make investing scary to everyone, and to just believe that the money is going to show up is not smart. It will when things turn around, when there's excitement, when there's risk on, when people are starting to invest in the future. Because crypto is a future technology. It's still under development. It is not done. It keeps getting improved. And this is why I'm sorry, Bitcoin, but your Betamax, okay, your A-Track, yes, it was great for a time. It will always have some value. I mean, you'll always be able to make jokes about 8-track. You know, if you go to a special collector, you can still find it. And it's not like it just draws all its value. So, I mean, Bitcoin will become eclectic. It's not going to die, but it's obsolete. It's for people with, like, certain passion extra money to spend, but it's not the future. It was a stepping stone that led all this mess of crypto behind it, where 99% of them are scams, and 1% of them are actually worth something. So it's a horrible weeding out process. It's not for the faint of heart. And nowhere in here have I said I'm a financial advisor. I talk about this, though, because I'm trying to learn how I want to responsibly manage my money. And I know places that I don't think are safe, or that I want to put it. So I talk about that. And I hope that other people can either help me learn through adding in the comments, liking, subscribing, and commenting, and correcting me when I'm wrong, which does happen occasionally, and I actually always appreciate it. Fact checkers are awesome. I don't have an editing team. I have viewers. But yeah, if you understand the market condition you're playing in, okay, then you can understand the best things to do. So, me chasing every shiny thing right away? No. But me working hard in recession-proof industries to make as much money as I can right now to save for good deals when the Fed turns around and starts printing the market on, by tracking how much pain has already come out of something and how close to the end of a bear market it is. Hex has started breaking its line back here, but we've got a long-term set of resistance that we have a long way to come back and meet, and we've got a lot of room for sideways action in here, basically a couple of months. But we started our bear market before everyone else. The pain started first here. Shakeout started first. That's optimism. It means we hit the bottom first. It means go contrary of most things and rebound first. It's my thesis, and I'm sticking to it. But are we there yet? No, but this is a great time to accumulate. This is a DCA time, not to ape in. Do not go with your entire life savings. I'm not going with my entire life savings. I call it dinner and a movie. I always call it dinner and a movie. Of course, Ethereum gas usually sucks enough that I have to save up a few dinner movies and do it every month or 2 months once, so I can, like, oh look, ETH gas only ate quarter what I wanted to spend. I don't know, gas has been cheap sometimes lately, but point is, yeah, this is a good low price to DCA little tiny amounts if you've got the extra money, if you're not scrambling to make gas and groceries. But if you are desperate for money, no, this is a great time to just try and save as much as you can. And you want to do little buys in good assets, yes, because Hex could rebound sooner than everyone else, which means, hey, like, oh, you're not DCing in, you're not spending anything, then you don't catch it when it suddenly does a 10x, because there's never any warning. That's why you DCA in just little amounts, or why I DCA in just little amounts that I can afford. So if this crypto goes to zero, can I still get groceries? Yes. Can I still get gas? Yes. Is my house still paid for? Yes. If these answers are not yes, do I buy crypto? No. Maintain my life practically first, and then I'm investing in future assets, long-term investments. Hex attached to Pulse Chain will do great. There's every reason to buy into the future when Pulse Chain launches. It's just not now. They're reprogramming, but there's also not a lot of pain left in Hex. That's why I feel like I called this bottom, and even here I said we've got to come down. Like, let's look over. You see this volatility up, down, up, down. Same with Ethereum and Hex. Well, we had a good rebound of no, that's a bottom. But then, ooh, isn't it funny? I've got this green-red range, and we've just been at the bottom of the red. Like, these are my possible absolute bottoms. Like, this red range might be the real red range. I'm just not sure how much Ethereum's crash and Bitcoin's crash will affect Hex because of the liquidity pool size. I haven't had time to try and run numbers and math on this, so I just laid it out, like, not hardcore, like all these sets like I do on Excel. I had some basic That's why I have areas, like zones. Like, okay, well, range of this and this with these assumptions. So small assumptions, but like really, the purple line is practically zero, where we step back to almost the beginning of hex. So our after all this pain, we bottomed out. Basically, I'm just worried that with the absolute red zone of Bitcoin, that between 1.5 to 2 cents, if Bitcoin gets down to 4K and Ethereum gets down to $120, I think we'll see 1.3 cent hex. But notice from here, that isn't even a 66% drop. But yeah, if Bitcoin falls to 4K, that's more than 66%. Ouch, kibble. So yeah, there's more pain to come in Bitcoin and Ethereum, but we are pretty close to the bottom in Hex. We found it first. We'll rebound first. Pulse chains coming. Close-knit community. Lots of adoption still to come, unlike these larger projects I mentioned, which are already saturated with people that need money now in the inflation crisis. So lots of different things going on. Keeping an eye, but not aping into Hex. Anyways, I hope you guys enjoyed this video. And remember, like and subscribe if you did and stuck all the way to the end. Thanks for tuning in, and sorry it took me so long to release it. I had some other things to do and some rendering issues. YouTube has been a pain in the butt, and the Great Canadian Outage up here with Rogers dying, that affected me. So anyways, stay frosty.